Hello everyone. Today is February 28th and almost 29th because it's closing to midnight, which is Monday. So we'd like to give you a week recap of last week, what happened in the market, and what I think coming next, and want to try to explain to you, from my view. Yields soared to one-year highs as traders bet on new stimulus to lift inflation more than previously expected. This indicated faster recovery anticipated, but Fed restated no rise in interest rate, which is very important on this, really this no rise of interest rate. Dow snapped three-week win streak, but still end February high as cynicals shy. The Dow slumped Friday, snapping its three-week win streak as a tech valley rebound. For a week, the Dow Jones Industrial Average fell 1.5% or 469 points, but closed a month higher following gains in early February. The S&P 500 was down 0.43%. The Nasdaq Composite rose 0.56%, though have been up more than 2% on the day. Cyclical assets underperformed, marked a reversal from strength seen during the week's volatile bond market sell-off. Apple, Microsoft remained in the red, while Amazon and Alphabet ended the day in green, following around a day early on rising US yield jitters. Salesforce fell 6% after it missed Q4 estimate and guide margins to be flat in fiscal 2022. DraftKings rallied after forecasting full-year revenue will reach $1 billion. The firm attributed the bullish outlook to a jump in new users and the launch of mobile sport betting on Michigan and Virginia. Bitcoin plummeted as low as 44,180 after trading about $52,000 on Thursday. The 10-year Treasury yield dipped to 1.2427%, down from the 1.614% peak seen at the section prior. Warren Buffett favorite quote to shareholder annual letter. Investors and speculators in the United States and elsewhere have a wide variety of equity choice to fit their tastes, which I think this is very important for those of you who invest. Everybody have a different preference, and you gotta, find your way to, to make what makes sense to you. An indicator that has been historically accurate in marking bottom in the stock market flash again this week for the fourth time since 2012, which is what you can see on this graph of how it was showing up in the in the three times of history when the vast bond spike. Then you see the market, and S&P 500 is an example. In this case, is actually dip at the bottom and then will be rebound. Of course, there's no guarantee, so the number could be different, this time, but really, that's just how it looks like in the past. World Bank America for a 2021 year-end target of 3,800 for S&P 500, so slight decline from the current level. Profits and economic growth will be strong, with GDP estimate and revised growth to 6.5%. Cyclical and small cap stock are still a recommendation for strategy for this year. The Asian market right now is still trading and running it in the afternoon at that time. The Hang Seng Index in the moment up 1.25%, rebounded from Friday that was down 1,000 points, and Nikkei 225 up 2%, along with Shenzhen Component up 1.6%, and Shanghai Composite Index up 0.5%. U.S. futures also right now showing that Nasdaq up 1.1%, Dow up 0.6%, S&P 500 for 0.7%. So it was definitely kind of look like it's a good picture to start the week, and kind of probably regaining some losses from previous week. For those of you who listen to my video, I ask you to be calm, not to be in panic mode. Next thing is to look at your portfolio. Each stock that you own, and ask yourself why you are buying the stock. And again, strongly recommend and suggest you not to have margin, short sell, or own stock that you're not familiar with, or too much speculative in nature. Only stock that have too much speculation in nature. I think the market may be overreacted with many people following the bad news and stock dumping. Over the weekend, we have few catalysts driving the market in positive directions. Johnson & Johnson has officially been approved the vaccine to be used in the U.S. for emergency use. Biden $1.9 trillion stimulus has been approved by the House and awaiting a Senate approval, which is making good progress. Yield curves dropped slightly Friday from 1.63% intraday high to 1.4ish. I just don't like the Wall Street convey a bad idea that recover economy will hurt the stock market, right? I mean, obviously we understand why recovery will actually drive the stock market going down, but it just doesn't make any sense saying, hey, the market crashed because now we reopen the economy, right? So I mean, this is for you to think, right, and making the argument that why and how that happened. I mean, because that would be really really funny, right? If you tell people that, that means we're doing the other way around. I hope investors just overreacted last week and market will rebound with positive news. But it is your judgment that if the market has crashed, or I just don't think it's time yet. And I think last week with the video, I already walked through some of the catalysts, some of the reasons why I don't think the market is correction. And really, if you look at the some of the historical graph I share with you, you see the market does have momentum move up and down. It's just normal, But there's obviously some concerns that will, if that ever happen, you really make the market maybe not going to be as bullish as what we expected. And so regardless, investor may potentially need to revise your expectations, timeline of your investment, dates versus weeks versus months versus year, and decide which stock to buy, hold, and sell. Because I got a lot of questions about, Friday or even Thursday, tell me if they should dump the stock and all, whatever. I just thinking people listen to the news and you just do maybe exactly what people tell you the news to do, right? So I cannot say it's right or wrong, but you got to make sure your judgment. You gotta look at it. You gotta ask yourself, hey, the stock that you own, whether it make any sense or not, right? If it's too much speculative nature, maybe yeah, if you rebound this week, you may sell, right? But again, tomorrow's Monday. If these catalysts, Johnson just said last time, if people will remember in the election time, before the election, worry about Trump, and the vote or whatsoever. It was dropped 2,000 points in Dow, and Nasdaq wasn't down that much, but still down. Then you rebound after the vaccine news come out. Of course, we have kind of digesting the vaccine news at the moment at this point. But this, remember, one shot, which is really nice. So maybe this will be the news to drive the market higher with optimism, and then yield curve may actually, I don't know if you drop, but obviously stay around 1.5%, which I think people already absorbed that information by now. So then you won't be as bad, right? And in reality, it is still lower than what would typically run the business at 2.5 to 3%. Have a nice and wonderful week, and hope everybody will be happy and cheerful for the exciting week that's coming, and the market will go back to the direction of rebound, and you just have to do the right things for yourself. Thank you.